Here we have the hourly price chart for GameStop Corporation, stock ticker GME. Here we can see that the stock is trading under a fairly sizable amount of selling pressure at the moment. This follows a period of fairly strong gains. So this is a bit of a turning point here that we're seeing in the stock. There have been many videos recently, obviously, that have suggested that a short squeeze is imminent, that all this all these upside surges in prices are likely to start happening. Once again, those are being proven wrong. What we need to do to assess these trends here is to actually look at the price charts themselves, not some random tweet that's found on the internet. That's never going to work. But what we can see here is that we've seen a fairly significant turnaround here in share prices after posting highs, which came in just below the $30 level. As I said in prior videos, I was suggesting that this $30 mark, it's a kind of a big psychological figure, and what I've been trying to point to with people is to just to get people to kind of imagine that you're a short seller. I mean, because this really is what this all comes down to. If you were going to short this stock, where would you go? Where would you start shorting this stock? And if we look at the arrow that I drew in this prior video, we can see that the level that I'm kind of suggesting here comes in at 29.93, which marks this prior price high, which was followed by a fairly significant move lower. This really is what led to the decline that resulted in these 2230 lows, this kind of lower 20s price level. So this was the final high before that area was reached. So I'm pointing to this as a significant price zone, and as we can see here, if we're looking at these recent highs, we came within 15 cents of that level. The ultimate highs here posted at 29.79. So this is significant, and it's history basically repeating itself here. So this is the type of price action that needs to be watched in order to kind of figure out where profit taking is likely to happen, where short sellers are likely to enter into the market. Most of the coverage that is devoted to GameStop, it's this random nonsense where people just kind of find some random tweet or something like that. I mean, it's never going to work like that. There will never be a short squeeze that's based on something like that. It's just not going to happen. You have to do the actual work and look at the price levels on the charts themselves. So as we can see here, the way that I'm kind of viewing this current descent lower, I'm sectioning off these latest price rallies into two different waves here. So we've got kind of this initial wave where the base was formed, and then we've got this kind of secondary wave here where there was a bit of an extension after a sideways trading period kind of resolved itself and broke to the top side. So we've got two kind of trend movements here. So as I'm looking at this secondary trend movement in the bullish direction, there are some interesting points here that should be made. Before I say that, I do just want to kind of note the fact that this prior trend momentum has clearly broken itself. Like this has occurred, and this is significant. We can't just kind of ignore this because it's very clear and it's very stark. This downtrend movement here in the relative strength index, that's this purple line, is stark and it's obvious, and it does suggest that this upward momentum has run its course. So that is a negative, but on the positive side, what I want to point to here is the fact that we have a very interesting confluence of events that is starting to occur just above this $26 level. And I think this is important for a few different reasons. One, we have these big round psychological figures that most people are kind of focused on: $20, $25, $30. It really shouldn't mean anything. It really doesn't mean anything fundamentally. These are random numbers, but these are the numbers that tend to get a lot of attention. So what's significant here is that the $26 level obviously comes just before the $25 level. So what I'm saying here is that this could be a level of support that kind of protects this $25 level because this secondary trend wave activity here sees its 618 retracement, 61.8% Fibonacci retracement at 2609. So roughly 2610, we're seeing a fairly major support zone that is developing, which could protect this $25 level, this kind of psychological level. In addition to that, we also have this. We can kind of drill in here a bit and see this upward sloping purple line here. This is the 20 period exponential moving average. So this is an hourly chart. Each candle represents a 1 hour trading period. This purple line here represents it's essentially the 100-hour exponential moving average. So as you can see here, these lines are coming into contact with each other fairly closely. I mean, of course, it doesn't match up exactly, but that's okay. I mean, these are close enough that it would be significant. So, in addition to that fact, as I mentioned before, we have broken this uptrend line in trend momentum. That is a negative, but we're kind of rapidly descending here, and the situation has gotten so bad that we're very close to falling into oversold territory. So, if that does continue, and if we do see a bit more of a decline here, we could absolutely see this indicator fall into oversold territory and then start to roll over. So what I'm saying here is that, we have seen a fair amount of selling pressure here, but these things have to end at some point. Just as this prior uptrend in momentum completed itself and ended, the same thing will happen eventually with this declining share price activity. So this is most likely to start to occur once we reach into oversold territory, and we're approaching that level quite quickly. If this was more of a slowing pace, like sort of a different slope with this purple line here, I might suggest, it might be a suggestion that we could fall further because we're not exactly close to oversold territory just yet. We're just below 40. We would need to get to a level that's below 30 to reach oversold territory. But what I'm saying here is that this slope is so drastic that we're much more likely to start to encounter this area more quickly, and this could be quickly enough to bring some support to these price declines here relatively soon. So overall, if people are being honest about the situation, they're not just going to point to some random tweet on the internet and say, XYZ happened today, and that means that a short squeeze is coming tomorrow. Urgent, emergency, watch this video. It doesn't work like that. You have to look at the actual price action here. And these declines might be worrisome for people. I can understand that. But what I'm saying here is that there's a confluence of indicators, a combination of technical factors and signals that are suggesting that this price decline is a bit too drastic. I mean, and you can even just see it on the price chart itself. It's like, this is really kind of falling off a cliff here, whereas the rally took much more time to build. It's often the case that you'll see declines happen more quickly than gains, but the more stable price action here is still in the upward direction. And that is overall, this is still a positive for the stock. So here's the current market analysis for GameStop Corporation, stock ticker GME.